Hey folks, Tony from Kentucky. Welcome to my penny portfolio. Well, the top analyst says it's time to go all in on Apple. And this is their reasoning. Investors and techies alike are eagerly anticipating June's worldwide developers conference, where Apple is slated to unveil its plan for the AI space. And Google reports of potential partnerships with OpenAI, the makers of ChatGPT, which I enjoy, and Google are swirling, driving up excitement for CEO Tim Cook's keynote address. Meanwhile, Apple stock has been on a bullish trend lately. The prospects of integrating advanced AI features into its extensive ecosystem of only 2.2 billion active devices. After hitting a 52-week low in mid-April, Apple has seen its shares rise 15%. Indeed, future AI integrations are some of Apple's many reasons for good cheer, according to Tigris Financial's Ivan Feinseth. Feinseth, a five-star analyst rated in the top 3% of the street's stock pros. Now, Feinseth expects the AI features to unleash a significant product upgrade, noting with the upcoming operating system upgrades and new product introductions, Apple will increasingly incorporate AI functionality across its product lines, driving increasing demand and massive upgrade cycle. Exciting stuff, folks. The new software signifies major changes as the iOS 18 update is expected to be one of the most extensive iPhone software upgrades in company history. Sleek new hardware is also part of the picture, as new models of iPads and MacBooks having recently been introduced, in particular new versions of the iPad Pro and iPad Air, which Apple showcased at its Let Loose product introduction in May, represents the first significant improvement for the iPad since 2018. Wow. Increasing demand from China is another bright spot for the tech giant, writes Feinseth, with a year-over-year iPhone sales from April up 52%. That's great, which followed sluggish numbers from earlier in the year. And I remember they was having problems over there. Feinseth is less concerned about the company's Q2 revenues, which at $90.8 billion were down 4% year over year. The analyst expects that improving iPhone sales and the new product announcements will lead to return to growth for Apple. That's good news. What does this all mean for investors? Apple remains a must-own stock, Feinseth concludes. Not surprisingly, the analyst rates Apple shares a strong buy rating while slightly lifting his 12-month price target on the stock to $245 from previously $240. At current levels, that target represents a 28% potential upside. That's amazing. Looking at the consensus breakdown, the optimists outgunned the doubters. Based on 22 buys, 11 holds, and one single sell, Apple stock has a moderate buy consensus rating. Given the $207 average price target, the shares are anticipated to be changing hands for a 9% premium a year from now. Now, okay, 34 ratings, 22 buys, 11 holds, and one sell. They have a low price target at 164. The average is 207, but they have a high price target at 275, which is indeed possible, folks. Indeed possible. Which, won't that be amazing? I mean, really amazing. This is from our old buddies at Black Swan Street. This is what everything did at close, 5-day and year-to-date. S&P 500 closed at 5,277.65. It was up 0.19% for 5-day and up over 10.5% year to date. The Dow closed at 38,686.58. It's 5-day. It was down almost 1%, but year to date up over 2.5%. NASDAQ closed at 16,735.02. It's 5-day. It was down 0.01%, which that's not bad. It's year to date. It was up almost 11.5%. Russell 2000 closed at 2,062.99. Its 5-day was up 0.71%, and its year to date is 1.78%. The FTSE 100 closed at 8,275.38. Its 5-day, it was down 0.77%, but year to date, it was up over 7%. Bitcoin, it closed at 67,663. Its 5-day, it was down 2.2%, but its year to date was a little over 61%. That's amazing. Ethereum closed at $3,778.16. Its 5-day, it was up 1.23%, and its year to date is 65.20%. Whoa. Gold closed at $2,348.10. Its 5-day, it was down 0.30%, but year to date, it's up on the backside of 14%, folks. Crude oil closed at $77.11. Its 5-day, it was down 3.41%, but year to date, it's up over 9.5%. And the 10-year Treasury closed at 4.5140%. Its 5-day, it was down 0.62%, but year to date, up 16.76%. By the way, Salesforce suffered worst trading day since 2004. That really sucks for Salesforce stockholders. Janet Yellen expressed concerns over rising living costs. Equity funds see massive weekly inflows on rate cut hopes. Citigroup asked 600 staffers to return to the office full time. How dare they? What balls on those folks? Boeing sees six-fold rise in employee concerns and safety and quality. I read something today about Boeing, them finding out that they use stuff for tools like cheesecloth and Dawn dishwashing liquid. I mean, all kinds of nutty stuff. People. This is people flying in the air and they're using crap like it. No wonder doors were flying off. I mean, come on. GameStop raised $933 million from an at-the-market equity offering. China set up its third state-backed fund with $47.5 billion to back its semiconductor industry. Yikes. Activist Elliott disclosed a $2.5 billion stake in Texas Instruments. Robinhood launched a maiden $1 billion stock buyback. That's cool. T-Mobile agreed to acquire almost all of U.S. Cellular's wireless operations in a $4.4 billion deal. Johnson & Johnson agreed to acquire rights to a drug from privately held Pneumab Therapeutics for $1.3 billion. Former Goldman executive appointed to next Cleveland's Federal Reserve president, activist Peltz, sold all of his Disney stake after losing proxy battle, which I'm pretty sure was over $1 billion worth. Yikes, right? U.S. oil giant ConocoPhillips agreed to buy Marathon Oil in a $22.5 billion all-stock deal. Zero-down mortgages are making a comeback. U.S. GDP data was revised downwards on soft consumer spending. Dig it. See that right there, folks? That's earnings calendar next week. Most anticipated earnings for the week of June 3rd. Yes, I see Monday they got, after close, GitLab, Bark, and Health Equity. Tuesday, CrowdStrike, Hewlett Packard's on there. Stitch Fix, Bath and Body Works. Wednesday, Campbell's is on there. Semitech, Dollar Tree. Who don't love the Dollar Tree? Come on. Lululemon. I heard that Lululemon was the worst company in the S&P 500 out of all of them. And it's probably because they have $90 leggings. Thursday, Big Lots, DocuSign. And that's about all the ones I really care about, and I really don't care that much about them. To be honest, folks. Who wants to check out the pitiful penny portfolio? First, let's look at the old public. It was now 1.23%, which is a bummer. But Charizard first edition is up over 1.5%. Yes, and Shrek Royalties is down over 1.5%. Can't have the yin without the yang, right? Alternative investments. Dig it, right? This is my safety portfolio that I've been, reoccurring into. It's up to $99. I still got the $10 weekly recurring, and the roundups are on. And if you look here, you can see my roundups are at $3.30 right now. Once it gets to $5, it'll transfer it from my account and invest it for my future. But, that's cool. The only one I still want to get someday is my dividend portfolio. Now, here's the pitiful penny portfolio. Let's see what it's doing. Well, I'm up 0.17% today. 657.17, got $150 buying power. I ain't got, the biggest part in crypto no more. It's still, I think I'm up to 16. I got 16 stocks now. My two newest additions is Netflix and Coca-Cola. So I've got Coca-Cola, Netflix, Visa, American Express, Southern Company, Disney, the XME ETF, the mining and minerals, Google, Meta, Berkshire, Microsoft, Apple, Tesla, Nvidia, Amazon, and NextEra Energy. I'm trying to get as diversified as I possibly can. And, something like 20 to 30 stocks, good companies would do it. So once I hit 20, I figure anything above that is like gravy in a diversification thing. So, and I was checking this out. If you look year to date, I'm up 17%. I am mighty proud of that. That's $95.47 of basically free money I've got, right? And check that out. Interest accrued this month, 40 cents, people. 40 cents free money. Come on. What would that be? 40, 50, 74 cents? I'm walking in high cotton, folks. Let's look at this right here right quick. Let's see how it's broke down. I got $262.25 in stocks and options. And I've got $244.58 in crypto and $150.13 in cash monies. Anyway, I just wanted to tell y'all what that analyst cat thought about Apple. And, if you've not bought into Apple, maybe now's a good time to do it, since that thing's coming up next month. Hopefully that thing goes well and Apple's stock goes up and we all make a little bit of money or a whole lot of money. Either way, it's fine with me as long as we don't lose money, right? Right on, folks. All right, that's about all I wanted to get into. I could do one of these videos forever. The only thing is it takes so long to upload them on my crappy internet. I always try to keep it 10 minutes or less, but this one's over 15 now, so sorry about that, if anybody does watch it. Anyway, folks, don't do what I do. I don't know what I'm doing. I'm doing this just to keep a record of it and talking to a phone and an iPad. But until next time, folks, take care of yourselves and take care of each other.